Stocks have been on a tear this week, with Wells Fargo, Morgan Stanley, and Bank of America each up more than 5% since Monday. It's a lot for a bank. However, the regional bank stocks keep slipping. The S&P Regional Bank ETF on pace for its fourth negative week in a row. It is down almost 10% since the beginning of September. But your next guest sees upside ahead. He believes the strong results we've seen from the major financial players will have a positive spillover effect down the line. In other words, to the regional and community bank level. Joining us now to talk about that and get some of his top picks, Dory Wiley, President and CEO of Commerce Street Holdings. Dory, it's good to have you back on. Why do you see sort of the wealth at the top trickling down to the smaller stocks?
Well, one, Brian, it's typical. Okay, you go through these phases. The market gets confidence in the big banks, they trade up, then the regionals, then the community banks. So part of that is standard. But as you pointed out, there's been a little sell-off here lately, and that increases the opportunity. The sell-off is because of fear. Banks have been a fear trade since 2008. Anything goes wrong, they run for the hills. So what is the fear? Well, you had this First Brands bankruptcy and Tricolor, and as Jamie Dimon mentioned, where there's one cockroach, there may be some more. So now everyone's looking under the bed, right? And the stocks have fallen off. And I think they've created, as long as we don't have a lot of that exposure in these banks, you look at these banks and you see if you ask them, we're going to find out these earnings calls over the next week. Do you have exposure to these kind of deals where they're doing off balance sheet financing? Do you have unusual pops up in your provisions? And if you don't, they're going to be looking really good.
Yeah, it's been fascinating to watch these numbers because the numbers for the big banks, the ones that we are showing on a big wall here, they weren't just kind of good. They were really good, Dory. I mean, do you think we're going to see kind of similar results from some of the regional banks, or is this more of a trading and investment banking boom that the regionals don't have?
That's a very good question because they're all up on M&A, which is going like crazy in trading and whatnot. But at the same time, these smaller banks have higher net interest margins and they're a little more focused and they tend to have higher growth rates than the big banks. So I do think this will continue because margins are stable and they're still expanding slightly on what we'll call a steady diet of Fed rate cuts now and to come, it looks like, for the next two meetings. And they're growing, and they're also looking at a really increased M&A in the banking sector, which has gotten really hot.
Yeah. Okay. Let's talk about a couple of specific names. Huntington Bancshares. This is not a small bank. This would be like maybe you call it a super regional. Ticker is HBAN. Tucked away kind of there in the West Virginia or Lower Ohio Valley. What do you like about Huntington Bancshares? Why is it attractive?
Well, I start with capital and deposits, and Huntington has the best core deposit growth of all its peers. And they're going to complete a transaction next week in Texas. That full disclosure, we help them work on. But and Texas is a super market for them to expand in. But they're also doing this in the Southeast. In addition to, you get close to a 4% yield, a nice growth rate, and the PE is very reasonable at 11 in a market where everyone's worried about high PE ratios.
Yeah, well, you mentioned Texas, so your next pick is actually based in Humble, Texas, one of the birthplaces, by the way, of the energy boom, and that is Third Coast Bancshares. Obviously, a big difference geographically and probably economically between Appalachia and Texas. So how do you merge? Why do you like Third Coast, and do they have anything in common with each other?
Absolutely. Well, Third Coast has the fastest growing tangible book value per share of any public bank in the state of Texas, and they've been doing it for a while. They've been increasing their ROA from 0.8 to over 1%, 1.2. They're doing a really good job. Full disclosure, again, we're a big investor in that bank, but it's cheap. It trades at somewhere between 1.2 to 1.3 times tangible book, about 10 to 11 times forward earnings. It's got the best probably PEG ratio in the country at 0.53. So I think it's probably the best value in a bank in the country. It's in the right market with the right team, with the right growth rate. Everything looks really good for it. So there's no reason why that bank shouldn't continue to succeed.